Alibaba just announced a huge reorganization and the stock price surged by 15%. But is this just window dressing? Did anything really happen here? And so that's what I'm going to cover in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Now, first things first, I know I've been less active on this channel lately, and it's really because I'm building out a ton of stuff that will provide value for the channel and the viewers later on. So just stick with me guys, there's a lot coming and it's very exciting. And so let's dive right into this. So first things first, welcome back to Jack Ma. After a year away from the country, it looks like he's back, and it coincides with Beijing's attempt to ease their tech crackdowns. That actually did hurt business confidence, and I would argue from day one, as they sort of entered their crackdown, they were really trying to restore confidence in the tech sector by doing away with anti-monopolistic practices. And so I would disagree with the Wall Street Journal here. I think that was the whole intention from the beginning. And you can see as the economy has opened up from those COVID lockdowns, there's senior officials that are setting a growth target of more than 5% next year, as they've loosened COVID rules and they've de-emphasized the ideology. Now we'll see sort of how this plays out. It's always 2 steps forward and then 2 steps backwards for the CCP, and so we'll see how this plays out. But once again, Jack Ma's return comes as China's leadership seeks to regain the confidence of entrepreneurs. And a lot of confidence was lost in the economy during the years-long regulatory clampdowns and COVID-19 control measures that, of course, battered the economy. Now, one thing that I was hoping for, but I didn't see, was that they would sort of help boost the economy by giving people sort of payment chips or something along those lines. It doesn't look like they did any of that, but it doesn't look like it was needed either, because it seems from early indications that as the economy has opened up, commerce has really come back strong. So that's really good indication of the direction that economy is going right now. So this brings us to the point of this video. Alibaba is expected to split into 6 groups and explore IPOs, which, I think this is strong wording. I think what it really should say is they're going to split into 6 groups which already exist, and I'll show you that in a second. So essentially they're just going to change reporting structures, so like a corporate reorganization, and down the line explore IPOs if they're warranted. But with a company that is so cash flush, why would it actually explore IPOs unless it's just trying to increase the valuation, sum of parts? I can see that. But, at the end of the day, if you have a golden business that is creating a ton of value for shareholders, why would you want to sell off pieces of that? So, I'm a little bit conflicted on this, and I'll show you why as I get through this. But first, I want to talk about exactly why I think this is happening. Recall, guys, that Tencent recently divested its $16 billion position of JD.com in a move to unwind its portfolio. And the reason why they did that was because Tencent came out and said that it's not empire building, nor is it trying to amass influence, because that's kind of what the CCP was saying. And so reducing its stake in JD.com helped to make that clear, said one person close to the company. The move was not triggered by any specific requests from regulators. Yeah, right. Nobody believes that, by the way. And so as its portfolio gets larger and larger, the public may start to say, where does this end? Does it end with a situation where Tencent owns 20% of every big company in China? Tencent wants people to know that's not the case. And why would Tencent even say this? Why would you say, oh, no regulators told us to do this, and we're trying to show that we're not trying to exert an undue influence on the economy? Of course, that was a move to keep the regulators at bay. And so you can see where this Alibaba divestment, I would call it a high-level reorganization, is coming from. I think the real reason for this is, one, you could be a little bit more competitive because you can be a little bit more agile as decisions are being made closer to the business unit as opposed to from a holding company CEO, maybe. But the real reason, I think, is just to get the regulators off your back. And for the people who've been with this channel for the last couple of years, you guys may recall this came out in April of 2021. And this was when the Chinese antitrust regulator started increasing its ranks to ensure that they continue to crack down on anti-competitive behavior by their tech monopolies. So once again, this is something that has been publicly identified as an issue in China. And so, they want to, or at least they say they want fair and good growth, I guess healthy growth is how they describe it, of their tech sector, but they don't want any one or two company dominating the whole industry. And so of course what they're really talking about is they're going after Alibaba and Tencent in this area. And so I think you're probably going to see more divestment as time goes on, or more of these types of reorganizations that decentralizes control and decision making. And none of this is a surprise to anybody who watches this channel. Beijing has shown over and over again its unease about the increasing concentration of economic in the powers of at least its two dragons. And so this is in a long string of potentially crackdown related items. Now, this was a news report that came out in 2020. And so, we've been on this ride for a while, but ultimately, I think and I'm speculating here, but I think what really happened is, those golden shares, if you guys remember, the CCP did take out golden shares. I think one of the reasons why they did that is to exert a little bit more influence on these companies and ensure that they operate in a way that's CCP compliant. So once again, I think this is a regulatory move, not necessarily so much of an operational move. So what exactly does this mean for Alibaba? Well, under the restructuring, Alibaba's various business units will be split up into 6 major areas. And so you can see, you guys should actually take a screenshot of this just so that you remember. But you can see the first business unit will be cloud. And so there's no coincidence that they listed cloud as number 1. This is the big focus for Alibaba. And I believe that Daniel Zhang will still continue to lead this segment. And so cloud consists of Alibaba Cloud and DingTalk. So just FYI. The second business unit will be China Commerce. So that's where Taobao, Tmall sit, but also Taobao Deals and Taocaicai, the two fast-growing sub-segments of this overall business. I think logistics, they didn't mention logistics specifically, but I think logistics will fall into China Commerce as well. The third business unit is international commerce. So, of course, AliExpress, Lazada, Trendyol in Turkey, Duraz in Pakistan, and their wholesale business. And so I believe that this will be the third business. Their fourth business will be their local consumer services business, and their fifth business will be their digital media and entertainment. And I believe that innovation will fall into China Commerce. It'll just like roll up into there. So the first question I have for you guys is, what's different here? I believe that these business segments have already been running, independently, or mostly independently. I mean, some of these businesses do interrelate with each other, but a lot of them are pretty diverse. Like Alibaba Cloud doesn't have a lot in common with China Commerce, and so the executive VPs or whoever that are running these businesses, I just don't think that there's a huge shakeup here. So, I think the only thing that happens is maybe instead of reporting directly to Daniel Zhang, these executive VPs of all of these segments will now turn into CEOs, I guess, and they'll report to an independent board of directors. And so that's fine. I think that does allow you to pivot faster, address competitive issues faster, etc. I guess you can see some of that, but I just don't see why that wouldn't already be happening in an optimal corporate structure, even if you're not the ultimate CEO. And so they go on to say that each business group will have its own CEO reporting to a board of directors and be fully responsible for the group's performance. And so Alibaba is going to sit on top of this structure and become a holding company overseen by Mr. Zhang. And so, those business groups will be allowed to raise external capital and seek initial public offerings when they are ready, Alibaba said. And here's where I would pause and say, okay, well, how many of these business units actually need to raise capital when the holding company Alibaba has so much excess capital already? So that part really doesn't make sense. The only way you'd want to issue some capital, list maybe 5% to 10% of the shares, is to just sort of realize the value for that business unit. I could see that happening. And so, but the only problem when you do something like that is you're taking ownership away from the Alibaba shareholders. I understand that we get paid in an IPO, the ADR holders or shareholders, we receive compensation for it, but it just increases our excess capital. So, I don't think it increases our wealth. It just changes our wealth to cash as opposed to ownership in the business. So for someone who's more of a long-term owner, I rather own more of the business than less of it. But for people who are looking at this and saying, look, ultimately this will allow the company to get a better valuation, sort of like a sum of the parts thing, I think you're right. And ultimately I think your portfolios will benefit as a result. And so we'll see how this sort of plays out over the long term. I don't think anything is happening tomorrow. I think this is more of a what, let's restructure this over the next, month, maybe year, and then maybe some of the business units might IPO. I don't expect an IPO overnight for any of these businesses. And here's what Alibaba said as to why they're doing it. The main reason to reorganize is to improve the sprawling businesses' empire's organizational efficiency. Daniel Zhang said splitting the business would make each area more agile to better compete with rivals. And so, JD.com, Pinduoduo have continued to bite into Alibaba's market share. Now, I would say that this might be a two birds with one stone solution, because one, it gets the regulators off your back. And two, you're just giving the business leaders in each of the segments more autonomy, because they're reporting to a board themselves. And so, yeah, I could see that this might be a two birds with one stone type of solution, maybe. But the other thing that I would say is that, like, I would have thought that that's kind of already happening. Yeah, you're reporting to the CEO, but ultimately you're responsible for your business. You're making all the decisions. You're doing the day-to-day execution. And so, whatever. It looks like ultimately this will seemingly be good for shareholders. Shareholders are really excited about this. The shares are up 15%, so whatever. But, the first thing that I thought when I read this press release was same, nothing really changed. And so some of you might be worrying about, like, what's going to happen to your options. This is not an immediate corporate action, so I think the listing status of Alibaba's shares in New York and Hong Kong won't be affected. And it's also what is being reported. And so I'm not concerned about any of my options. You guys already know that I hold cash secured puts for Alibaba, with a net purchase price of $70. So once again, I'm close to being in cash again. But yeah, I don't think anything is happening to any of the shares. It's not, once again, an immediate corporate action. And I love reading the Wall Street Journal comments. And I think this guy, he calls himself Bozo. I think he nailed it. So he said, from an ADR perspective, there's nothing changing. It's basically a giant reorganization. It's basically creating 6 new lines of businesses, but the annual report will be a single report that lists how these 6 new businesses are performing. So how is that different than the way that they report right now? So overall, it's looking like a window dressing. Obviously, if one of those business units matures enough to be its standalone entity, then they will IPO that unit and have a new ticker, and Baba's balance sheet will shrink accordingly, with the hope that the ADR holders get some monetary benefits, like what happens when, like a US company will spin off one of its units. And, the other thing that I would say is spin-offs are really good if you want to offload some debt as well. Once again, Alibaba has no debt. So, do they take on some debt, lever up some of these units before they spin off? Maybe, to provide the ADR holders with a little bit more benefit. I don't know. I don't even think that's the right move. And so, I'm interested to hear what you guys think. Are you guys excited about this? Is there something that I missed? And so let me know in the comments below. Also, guys, what you guys may have noticed is that I'm slowly starting to release more sort of like Q&A videos, and I've created this whole Q&A series, which I think is better value to you guys as viewers. And so if you guys haven't seen the Q&A series, no problem, you can get to it right here.